Hi everyone, hope you're all doing well, and today we're going to talk about Alibaba stock, which is currently up 6% in pre-market hours. Now the stock is going up, crazy enough, off one of the biggest fines that's ever been handed out, and that was Alibaba getting fined. I believe the amount was 2.8 billion, but the stock market does crazy things and the stock is going up on that news. And yeah, it's really weird how the stock market works. I think the reason why it's probably going up after the news of getting a big massive fine is because investors don't like uncertainty, and now we know the outcome of what the fine situation, investors are now coming back in. And that's why I always say, when there's uncertainty, those are the best times to go buy, because in the long run, if you're buying a great company, it will sort itself out and you'll get some really good gains. So yeah, I think investors are coming back in now. That's dealt with. Some sort of situations like this always happen with companies like Alibaba, because the thing is, they're very aggressive on acquiring companies and also making sure they don't lose market share and make sure they keep the sellers. And yeah, every so often some stuff like this might happen, but the thing is, it doesn't affect the company in the long term fundamentally. And as well as that, I think the fine of 2.8 billion was like 4% of the revenue or something. And also, when you've got an amazing balance sheet like Alibaba has, it's nothing. They'll be like, yeah, that's fine, there you go, there's the payment. They won't be too bothered. So yeah, in the long term, those are the sort of things where you want to be buying. Now personally for me, I actually didn't think it would move that much off the uncertainty going. I thought it'd just be flat, but it's really gone up in share price. And I was posting on Patreon, which if you want to join, the link is in the description. I was posting on Patreon saying, look, I might buy some shares in Alibaba on Monday. Now with it going up that much, that's when I don't buy. If a stock makes that crazy move, that's when I tend to not buy. So maybe it does calm down in the next few days and does kind of give back them gains that it's had today, and then I might buy some more shares. But it was one that I was really considering to buy, so a little bit annoyed that it did shoot up in Monday pre-market anyway. Now with Alibaba the company, we're going to just cover a few things with this company. And the first thing is that Alibaba is still down 30% since its 52-week highs, which it put in October 2020. Now, the last time that Alibaba actually had a dip this much was in December 2018, and from there it went on to make 52-week highs, which we've just had in October 2020, and it made 130% return in a year and 10 months. So if we go with history, last time Alibaba had a dip like this, it ended pretty well for Alibaba. You would have over doubled your money in under 2 years, and normally it doesn't go down much more than 30%. So yeah, it's one that I've been buying a little bit of. I didn't buy too heavy, but I have been buying Alibaba in this sort of range, because like I say, when you look at what historically has happened when it's done this sort of thing, it's normally gone on to new highs and giving you a nice return as well. Now the thing with Alibaba is that it's a massive company, and that's what you've always got to remember. Sometimes people forget how big this is. So obviously it dominates a lot of e-commerce, and it does that through obviously the Alibaba name, it does it through the AliExpress name, the Tmall name, the Bio name, but as well as just getting an e-commerce play, what you're doing, you're actually getting Alipay, AliCloud, you're getting investments into the streaming side of it, the social media side of it. And basically what I say is, if you're in China, you use at least one product that Alibaba owns. And sometimes it's really hard to value Alibaba because it owns so much and it covers so much. You'd try to compare it to an Amazon, but realistically, they're covering more spaces than what even Amazon is. And it's very hard to value Alibaba because it's not just solely an e-commerce play. So yeah, it's a tricky one because, like I say, it covers more than what Amazon does. But the only thing that you're always going to have against a company like Alibaba is that it'll never trade at a valuation that Amazon does, even though it offers a great amount of services, is because it's a Chinese company. And unfortunately, that has always been one of the things that we've lived in, is that Chinese companies do not get valued the same as a US company. And that's something that you've always got to consider. So it's always really tricky for one to say this is a very cheap valuation for Alibaba, or this is a overvalued company, just because of that factor. But I think when you do take the valuation into context, that they are trading now at a forward P of 18, I believe it is, as well as trading at a forward P of 18, it's the cheapest price to sales ratio that it's ever traded at. And let's not forget, you're picking up a company that's going to be growing at a huge rate, like a 30% profit growth rate, a 30% revenue growth rate. And then you put that all into context of okay, so you're going to be picking up here a 30% revenue company, 30% profit growth. You're covering so many industries, cloud, payments, streaming, social media, multiple e-commerce names. And then you compare it to a lot of valuations of other companies, and then you look at the historic value of, look, when it's down 30%, this is what happened last time. you put that all together, like where do you think Alibaba's going to be in the next few years? And for me, I believe that Alibaba will, in the next 2 years, go back up to a $300 stock, and I think potentially go somewhere to the $350 range, which is where I would potentially sell about half of my position if it was to get there. So that's where I'm thinking Alibaba will go personally from here. Like I say, it's always a really tricky one because it's very hard to compare it because it dominates so much, but then we can't compare it to the likes of Amazon, which is always really tricky. Now, I guess overall that kind of leaves me with my game plan with Alibaba, which I kind of gave you a little bit there. So I own some shares that have I believe it's $170 average, and I also own some shares that has a $220 average. So personally for me, like I say, half of my position would be sold at $350, and that's where I see it going in the next 2 years myself. The last time I kind of bought a lot of Alibaba was a few years ago. I believe it was 2018. And when I bought into Alibaba, I held the shares up to like $320. I made a video about 12 months ago actually saying I believe that's where Alibaba will go, and it got up there, and then I sold half my position, taking a nice 80% gain, and that's probably somewhere very similar where I see it working out for Alibaba again. So in terms of what I'm planning to do with Alibaba, that's where I'm at. I think I'll make a nice gain on this one. I do think it's a great company, and I'm just a little bit annoyed because, like I said, I wanted to buy a few more shares in this one, but yeah, obviously the fine was taken very positively and the stock's going up. So yeah, hopefully I am still going to buy a few more shares in this one, but it'll be one where it might cool off in the next few weeks after this news, and then once again might be able to pick some shares back at the value it was before the fine news did come out that sent it up. So yeah, thought I'd talk about Alibaba stock today, not talked about it for a while, and also just a bit of a recap on it, especially because it's dominated the news quite a bit over the weekend anyway. But hope you enjoyed it. If you could, smash the like button. If you are new, subscribe as well. That'd be absolutely amazing. The road to 10,000 subscribers is on. We're kind of getting there now. But yeah, I'll see you on the next video.